Thank you very much. Deputy Joe Higgins, please.
So Nyberg, in your executive summary, page 1, you say this report explores what the Commission considers to be the most important policies, practices and linkages that contributed to the financial crisis in Ireland. And then in page 5, in a paragraph entitled The Herd, Other Banks, you say, bank management and boards in some of the other covered banks, and they would be the major banks in this country, feared that if they did not yield to the pressure to be as profitable as Anglo in particular, they would face loss of long-standing customers, declining bank value, potential takeover, and a loss of professional respect. Was excessive profit seeking by banks and indeed by property developers an important practice in contributing to the crisis?
Mr. Chairman, I don't know what excessive profit is actually. The thinking at the time was that the banks should be as profitable as they could be. And that was why the real estate sector was so popular among banks.
Did you look at the level of profit-taking by investors, banks and developers in the Irish property market leading up to the crisis?
You mean in detail?
Well, what some of the major institutions were returning in terms of the profits from the market.
Mr. Chairman, in a general manner, but there was no time and there was no resources to make a detailed run through of the annual reports of 6 banks and analysing them. It was, I mean, the general level of profits was known. And the stress on profitability and growth was obvious from a run through of the board minutes in several banks.
Yeah, but Anglo was obviously highly profitable.
What it seemed to be at the time, yes.
Yes, and then other banks, as you say, were essentially chasing that.
Yes.
So it is true to say, really, that they were chasing an abnormal level of profitability. Is it?
Well, I mean, they did try to become more profitable, so that Anglo wouldn't look as that they could show more or less, not exactly the same profitability as Anglo, but a similar level of profitability and growth, yes.
Yeah, obviously the huge extent of credit extension and the massive borrowing, etc., that was in pursuit of greater profits, isn't
Yes.
that correct?
Yes.
Would you consider what went on as profiteering?
I wouldn't know. I mean, I would look at it as essentially what businesses do. The businesses, not only banks, try to keep their profitability high.
Yeah, but is it moral that there are no restraints on, apparently, as you might perhaps are saying, on institutions to the degree of profit that they can go after?
Mr. Higgins, I really can't make a judgment, and the Commission can't really make did not make a judgment on whether profits were too large. I mean, too large, or the apparent profits at the time were too large or not.
Just make an intervention here. I mean, the business model that Anglo were using was being modelled and mirrored, or other businesses, banks got into using that model.
Yes.
In terms of the profitability that Anglo was making, was there any consideration in the other banks as to the sustainability of that model, given that the profit margin was so high in it?
Mr. Chairman, as far as the Commission could ascertain, there was not. It was considered up until the eve of the crisis. It was considered sound.
Okay. Sorry, Deputy Higgins, just like that.
Yeah, let me come at it from a slightly different angle, Mr. Nyberg. In the 10 years leading up to the crash, house prices in Ireland escalated at a dizzying rate by common consent. Perhaps over 10 years the equivalent of the average industrial wage each year. And the young generation of working people who were not buying for speculation but for a home over their heads found themselves facing mortgages of 40-year duration as opposed to their parents' 20 years because the price went so crazy. Isn't that massive price increase, is it not attributed to excessive profit-taking? And with no concern to the downside effects socially on the people who are forced to put a home over their heads. And in that regard, Mr. Nyberg, I mean, you really had a unique opportunity, didn't you, to assess the mindset of people and institutions who were very central to the property market. I mean, 140 of them you had the opportunity to speak to. So you spoke to those who winded themselves blowing up the bubble. You spoke to those who should have been elbowing the bubble blowers in the ribs to restrain them but didn't, and indeed others. Now, can I ask you, in the privacy of your conversations, did any of them unburden themselves of any uneasy feelings at the time that while they were making massive profits for their institutions, this came at a huge cost to, for example, workers trying to buy a home?
Mr. Chairman, the house pricing increase was a result of speculation by those who had the possibility to do so, and also by them being financed primarily by banks. Of course, those who bought real estate at high prices, they did so willingly. They took the risk willingly. And they took those that did not sell, they lost money. Both those who are rich and those who are poor did so. Now, as regards the discussions that we had, the reaction of people who were involved in lending varied very much, like it usually does with people. Some thought everything had been going well until the Americans, until the American crisis. Everything would have gone well. Others were deeply shocked. On the other extreme, there were people who were deeply shocked and didn't understand, how they couldn't have seen it at the time. Everything, it was all over the place. The reaction.
Mr. Nyberg, you spoke to the speculators. You said speculation, so the people involved. You spoke to the speculators. I'm just curious if they had any awareness of the social downside of the speculation. And would you say it's fair to put an ordinary worker buying a home, which is a human necessity, on the same level as a bank speculator, which you seem to do?
Mr. Chairman, I try to understand the question. I really don't do it. I might not answer correctly, but the banks did not, in their own view, or the bank managers did not seem to consider themselves speculators. They lent money to real estate developers and to people who bought real estate. As the value of the real estate went up for reasons that they considered external,
Supplementary from you as well, Joe, there.
they thought that everything was going well. So larger issues of social consequences and so forth did not arise in that consequence.
Just the last question then,
Certainly.
for my time out there,
Yeah.
Chairman. You speak, Mr. Nyberg, of an assumption by many that the financial markets would be stable and efficient by virtue of their own workings. When the drive for profit maximisation and what could be a cutthroat competition between financial capitalists is what happens in the financial markets, how could it be rational to think that you could have stability in that system? And just because I have to get the whole question into one, again, in relation to the markets, you said when the Irish government was put under pressure to guarantee the banks, it could have been useful to access available temporary funding to gain time, you said, but there were concerns that the market would not have acted positively to such a delay at the time, which is to assume that the next morning or the morning after there would be pandemonium in the markets. Now, Mr. Nyberg, you've been around a long time, and you've been in Finland and you've been in the European Union. You've seen a lot of how these markets work. Can financial markets hold governments to ransom? Did that happen in the course of this lead up to the guarantee and indeed the bailout? And do you think it's democratic that private institutions have such massive power over elected governments?
Mr. Chairman, the issue of whether markets are stable or not, I mean, that was, regardless of what one thinks oneself, that was what was believed. That was the prevailing belief in Ireland. It was the prevailing belief in many other countries as well, internationally. Now, of course, when one looks at what happened, it's easy to say that that belief was not realistic. Why that is at present the remit of thousands of academicians who are making studies on why the crisis actually happened. Now, the markets, in a way, I mean, if a government wishes to borrow money elsewhere than from the central bank, it will have to be credible. You know, the markets, or those who take part in the markets, have to be sure that when the government borrows money, it will be able to pay it back. To that extent, governments are not free to do or to be whatever they want to. But as long as market lenders think that the government will be okay, as long as they believe that they will get the money back, governments, within that constraint, governments are free to pursue whatever policy they seem wise. That's more or less this. That I really can't answer anymore.
Can I just take Deputy Higgins' question for 1 second, because you actually referred to it in your own report, where you imply that there was a parallel universe out there, in a way that there is the people who are buying homes in one property market and there are investors in another property market. And in your report on page 95 you say investors and other borrowers as well as bank executive management have an interest in doing deals with each other for profit and for glory. Can you please elaborate what you actually mean there? Because I think that's what Deputy Higgins is indicating in his questions.
Well, Mr. Chairman, yes, you are correct in a way. I mean, most people normally do not speculate, of course. But there are, I mean, both in Ireland and elsewhere, there are not only big speculators but also small speculators. People who, for instance, I've been told, I'm not sure that it's not in the report, but I've been told by knowledgeable people that there were people who borrowed money to buy real estate in Ireland, but also outside Ireland, in the hope that this would prove profitable for them in the longer run.
But by glory, do you mean profitability, or do you mean glory that this is a sort of a machismo,
well, both,
backslapping, and
both, Mr. Chairman, both. Both. I mean, it's certainly the Commission got the impression at several points from the banks that a lot of the activity was not necessarily only for profitability, though profits were necessary. Yeah. They were absolutely there, but it was also for professional what do you call it? They wanted to be seen as good professionals, and good professionals make better business deals than their competitors.
Thank you, Mr. Nyberg. Deputy Mike.